Good day, ladies and gentlemen, and on behalf of Montega, welcome to today's virtual roundtable of electric optic systems. I'm delighted to welcome the CEO, Dr. Andreas Schwer, as well as CFO, COO Clive Cuthell, who will speak in a moment. The gentlemen will guide us through the presentation and give us a dive into the company. After the presentation, you will have the possibility to ask your questions in a Q&A session. The management will answer your questions right away. So I would say, let's jump straight into it. Andreas, the stage is yours.
Thank you very much, Judith, for the nice introduction. My name is Andreas Schwer. I'm the CEO and Managing Director of Electro Optic Systems, an Australian stock-listed company. Ladies and gentlemen, thank you very much for joining your time with us this afternoon. Before we jump into the subject, I would suggest that we quickly introduce ourselves, and I hand over to my colleague Clive to give some words on his personal background, please.
Thanks, Andreas. Good morning, everybody. My name is Clive, and I am the CFO and COO of EOS. I've been a CFO for almost 20 years. I'm from Scotland originally, and I've lived in Australia for the past 25 years. I joined EOS in late 2022 as part of a new management team to turn around the business performance and commercialize long-standing intellectual property. When I walked around the business when I first joined in 2022, I was surprised by a very long list of intellectual property that had not been commercialized, and realized there was a significant opportunity to grow this business over time. So I've been working with Andreas for the last 18 months, implementing the first phase of a turnaround project that is well underway, but has a lot of growth still to come. So with that introduction, I will pass back to Andreas.
Thank you, Clive. My name is Andreas Schwer. I'm German citizen. I'm an aerospace engineer. I have been working 14 years with the Airbus Group in the satellite business and as head of engineering of the Eurocopter helicopter branch of Airbus before I joined in US company working on military shipbuilding. Then 2013 took over the combat systems division of the Rheinmetall Group, which is the core of Rheinmetall. 2018, I was hired by the Saudi Crown Prince to develop and set up defense industry in Saudi Arabia. During that time, I was forming up joint ventures with all major defense companies around the world. And at that time, I was also running into EOS, the small Australian-based company, which has been the only one who was ready and in a position to share with us some key technologies, predominantly in the area of high energy laser weapons with the Kingdom of Saudi Arabia. That's the reason why I did the due diligence in Australia. And obviously at that time, I found out that the company has a perfect and incredible backlog of IPRs and innovation, but the company was not in a position to commercialize that and to take advantage in a fiscal sense from all of that. At that time, I didn't care too much because I just wanted to have the technology in favor of my Saudi Arabian business. And later on, once my Saudi term came to an end, by coincidence, I was asked by the board of EOS whether I would not be ready to join the company at a time when the company was quite in distress. And I said yes, because I knew that we can make a fabulous turnaround of the company and make the company grow in an unprecedented manner. And that's the reason why I joined EOS and didn't go back to Europe and joined one of the bigger European defense conglomerates. I would like to start now with a presentation of the company, and I will come to the point of the stress situation in 2022 in a minute from now. So EOS was in the beginning an Australian government-owned research institute. It has been privatized in the early 1980s. It is the largest homegrown aerospace and defense company in Australia. We are active in 3 domains: defense, space, and satellite communication. Once the company has been established in Australia, we have created afterwards footprints in the US, in Singapore, and UAE, and small operations also in Germany, in Deckendorf in Bavaria. We have today about 450 employees, and we are listed on the Australian Stock Exchange since the early 2000s. So what you can see in the picture, this is not Photoshop, this is one of our installations in Australia. We are operating 2 of those kind of stations where we can track any object in space by laser, a high power laser system. So this is again not Photoshop, that's reality. And we are the only company outside the US who can do this with this high level of accuracy. But we come back to that in a second from now. Please go on. So EOS is famous for its accuracy and tracking capability. That's the kind of underlining feature in all of what we are doing in all of our business activities. Our business is 65 to 80% export business. So we do most of our export business in the Middle East, US, and in Europe. We have a growing market size, and we are famous in the market for our highest accuracy. So usually our products have a leading edge performance in the range of 30 to 40% in terms of higher range, in terms of engagement against targets, or higher precision with a first shot. We've been the inventor of the weapon system called remote weapons. So those are the systems which you can find on the top side of armored fighting vehicles of trucks or military trucks. We are the world market leader in this domain. It's not only a question of accuracy, it's also a question of quantity. We are producing our systems in Australia and in the US. We are about to set up production capacities in the Middle East. And if we are successful with a very, very large bid in Germany, we will also set up a production line in Germany with our German partner, Diehl Defense. So the remote weapon station business is one of our cash cows as of today, with a net profitability in EBITDA range of 15 to 20%. Our second cash cow as of today is the naval satellite communication business. You can find this in the right bottom corner of this slide. That's a Brisbane-based operation, which we have acquired in 2019. And since that, the company is growing between 50 and 100% year over year. The net margin, EBITDA, is between 30 and 35%. It's extremely profitable. And beside those 2 cash cows, we have 2 strategic business activities where we expect significant game-changing growth in the future. But I will come to those 2 business activities in the later part of my presentation. So please move on. So when Clive and I joined in the middle of 2022, the company was in a significant distress situation. And I need to give you a little bit of update what happened before and why this happened. So the company was privatized from this research institute state by Dr. Ben Green. He was the founder of the research institute. Dr. Ben Green was running this company till August 2022 for more than 36 years. I think that's quite world record. Dr. Ben Green is one of the most famous laser physicists worldwide. And we have to say thanks for all what he has done for the company. But as good as and as phenomenal he is in terms of research and science, as modest are his capabilities in terms of commercials and industrialization. So the company has put in place a management team for all those 36 years, which was lacking of industrial and commercial competences. It was driven by research and scientists. And even on the board, they were mostly retired officers and scientist type of people. That was the reason why the company has little to no focus to commercialize its large inventory of IPRs and innovation, but instead just reinvesting their own surplus cash in making the products even better and stronger. Obviously, that is the main reason why the company was not reaching out to key export markets like the European market, because they were just happy sailors within the Australian continent, and some few exceptions in terms of export into the UAE and the USA. But again, as the focus was not on commercialization, there was no intent to grow the company in the business. And what has happened then in the years 2021 and 2022 is the following. First of all, Australia was cut off from the world by the COVID-19 effect. The borders were closed and we could not participate in any kind of tender, to any kind of competition, because we simply couldn't get there. So for 18 months, there was no order intake possible. Second, The company, or Dr. Ben Green, he has invented a fabulous technology. It was a communication technology in the optical domain between a satellite and a ground station on Earth. That's obviously a fantastic piece of technology, which up to today nobody can master. But the mistake on our side was that EOS tried not only to sell this kind of key technology to one of the established satellite prime contractor companies like Boeing or Lockheed Martin or Airbus. Instead, EOS was seeking to set up its own satellite communication system in space, for which the total investment demand was more than $1 billion. So obviously, a company like EOS is 100 times too small to bear this kind of risk and to run this kind of operation. Nevertheless, the company was reaching out at that time to big US primes, asking whether they want to participate. So companies like Lockheed and Boeing, they said, it's fantastic. We would like to buy this technology and we leave you a minority share. Obviously, US was not interested in that because they wanted to keep control. And because of that, the partner said, thanks and goodbye. We wish you good luck. We subsequently tried to find money on the open equity market, and we almost secured a significant deal with American hedge funds through a so-called SPAC. The problem was that in the beginning of 2022, the SPAC market at the New York Stock Exchange was just breaking down, and our deal, which was initialed, was not executed finally. So the company at that point has invested more than $80 million into the setup and was failing finally to get the investment done. So those $80 million were obviously a disastrous burden in our books, and was really a heavy burden for the further execution of our operations. At the same time, also, we have signed a significant contract in the Middle East. I think the order intake was, or the size of this contract was $340 million. The contract is highly profitable with 20% net margin. The problem was it was signed under terms and conditions which are almost unacceptable for a company like us. We got only paid 50% of all the payments once we would have installed our systems on vehicles which have to be provided by the client. The client was free to deliver us his vehicles whenever he wants, so there was no penalty clause on his side in the contract. Obviously, the client was facing problems with some gearboxes, and he didn't deliver for 18 months any vehicle to our factories, so we could not cash in 50% of what we have formerly earned. And we were piling up instead inventory of finished goods of $150 million on our shelf without being able to liquidate that. So this $150 million plus the exposure in this US satellite constellation business called SpaceLink, plus being disconnected from the market, was causing a severe liquidity crisis in the middle of 2022. So at that time, some key shareholders said, so far, but not any further. So they requested the board to exchange the management, and that was the time when Clive and I came on board. And since that, we have done a complete turnaround of the business. So once we arrived, we have instantaneously done a restructuring program, first with a refinancing. So we had to get out to potential investors and creditors to get a kind of bridging funding. And obviously, as we have had only money for a few weeks of operations on the bank account, there was no way to go for capital increase. We had to go for a debt type of facility from existing shareholders because there was no time left to do an in-depth due diligence. So we got two offers from existing key shareholders. We have taken the one which was better one. Obviously, as the company was almost running out of money, we got those kind of facilities under severe interest burden. So we pay interest rates between 20 and 26%, which sounds horrific. Yes, it is a strong burden, but on the other side, we had no other option other than to go into administration. So we took that, and meanwhile, I can tell you we have paid back already half of the bill, and the remaining debt we pay back till October 2025. Then it's off the books, and we are debt-free. We did an immediate restructuring program of the company. We let go 30% of all people, predominantly in the indirect domain. We've taken out a complete layer of management and have had a kind of reduced cost base by $25 million year over year, already after 2 months once we've started this restructuring program. So for me as a German citizen, I can tell you I've never seen this kind of quick execution of laying off people in this kind of record time frame. We also have stopped any money-losing businesses. So obviously, we have immediately put our US SpaceLink operation, this satellite communication system, we put it in the kind of Chapter 11 process. So it's in liquidation, it's written off the books, and there's no more burden from that one. We also stopped other businesses which the company has started left and right, which were not promising from a short-term cash perspective. And instead, we have concentrated on the 4 pillars of activities, as I've just shown you some slides before. So we have changed the way to market. I mean, the company has never reached out to key markets like the European markets for the reasons I mentioned above. So we have also changed that one, but instead of going into those key markets by our own, which is very capital intense and which takes lots of time to build up the lobbying power, we've decided to go for a partnership approach. So we are teaming up with local champions in order to use their financing strength and to use their lobby power to get in record time into those markets. So as most of you are from the German market, the German partner is the company Deal Defense for us. So all that has been done, and thanks to those kind of actions, and you can see on the right side what we've done, we have achieved a tremendous turnaround and a quite remarkable result already in the first year after we have taken over the leadership of this company. One further element which I need to mention before we move on is we've also started instantaneously to commercialize all those inventories which we have sitting on the shelf. So we brought to the market last year 3 key new products, which are now enlarging our product base significantly and enlarging our revenue potential significantly. I will come in a second in a more detailed way to those new products, which are a game changer for the company and the market. So this is a kind of quick update on the complete restructuring program. As Clive was mentioning, we have finished the first phase of this program. We are now in the middle of the second phase, and happy to discuss on the future in a second from now. If we can please move on. So here you can see the management team. All people are new to the table. So it's Clive and myself. We have hired for the local operations in Australia, Ian Cook, with more than 25 years of experience in production and supply chain. I think he's one of the best in the defense area you can get for those kind of jobs. I've recently hired a former colleague of mine, Christian Berg. He was the head of sales of Rheinmetall in Germany. So he has obviously the best customer intimacy, as you can imagine, thanks to his previous role. And he's running now and building up our international defense business with a very strong focus on Europe, the US, and the Far East. Also on the space system side, where we do this kind of space intelligence, space analytics work with Dr. James Bennett, we have a young guy in place who is one part of our big restructuring and reformation program of the company. We've meanwhile also hired in the next level a complete set of new guys and girls in order to make sure that we have a strong industrial and commercial spirit and base within all the leadership levels. That our mission is almost completed, so the exchange of management is coming to an end pretty soon. So please move on. Clive, I would like you to give us a little overview on the achievements in 2023.
Sure. Thank you, Andreas. And for the benefit of recent joiners, so I'm the CFO and COO, and I've been focused on cash management and margin management over the last 18 months, particularly discipline on costs, discipline on capital and strategy, and ensuring we can repay debt. I'll make a few comments here. The revenue in 2023 was the highest the company has ever achieved at 219 million Australian dollars, a significant increase on the prior year. To everyone's surprise, the business was EBITDA positive in 2023 as well. And that was driven by significant growth in gross margin, which we might touch on briefly a little bit later. Cash receipts from customers were the highest the company has ever achieved at 325 million, which included the realization of significant inventory in the Middle East, following a fairly frank discussion with the customer about improving the contract terms on our largest contract in the Middle East. The net operating cash flow of a positive 113 million Australian dollars was then used to invest in the business and repay debt during September 2023. So the result, I think it's safe to say, was at the end of 2023 was stronger than the market expected. More importantly than the financial results, however, for our future growth, we did a lot of work in 2023 on widening the product base and widening the customer base. so that we could get away from customer and product concentration. So Andreas is going to talk now a little bit more about what we did in the weapon stations area. So next slide, please, David.
Thanks, Clive. So on this slide, you can see our actual range of products in the remote weapon station domain. This is the broadest range of products anybody can offer in the global marketplace. So for your understanding, so far we've achieved 90% of our revenue in the defense business with a single product, which is called the R400. You can see that in the middle of this page. The R400 is a bestseller in its market class. It's the one with a 30mm cannon, having by far the most firepower. So this product, which comes again with a net margin of 15 to 20% EBITDA in the ground-to-ground configuration, and if you use it in the anti-drone configuration, the net profitability is almost double the size. So this product has then been accompanied last year by new products we brought to the market. The smaller brother, the R150, which is the most lightweight system in the market. It goes on any small platform, even if it's a very tiny robot vehicle, or on top of a small pickup truck or a logistics truck. So this is a product which we sell in thousands, and that's the product which we will also offer together with our partner Deal to the German Bundeswehr end of this year. Then we come out with a tender for 1,000 units with the option to go up to 5,000 units, which will trigger a local production in Germany. So the R150, hopefully we become also bestseller in its class. And so far we are very confident, as the first shooting campaigns and competitive trials has led us always being the winner with the highest performance over and above any competitor. We brought also to the market last year the R800, which is the strongest weapon station in the global market. It competes against manned and unmanned turrets. As you can see here on the wider right side, D1600 is one of those unmanned turrets. So what is the benefit of an R800? The R800 has the same firepower, same performance on the battlefield, but it comes for 30% of the cost and 30% of the weight. So obviously this is a super attractive option for most armies around the world, and we expect quite a significant number of clients to switch from turrets to those weapon stations. As we are almost the only mover in this market segment of the very strong weapon stations, we are in a quite good position also with respect to net profitability. So this page summarizes the various products, and what I want to say that each of those products come in a family. So the R800 comes in the ground-to-ground, land-based version, and also in the counter-EOS version, which you can see on the bottom side of this page. We also introduced to the market last year a product called Slinger. The Slinger is the anti-drone version of the R400. It is highly specialized. It has its own radar system. It has a so-called 4-axis gimbal. It has a specialized software, and it is by far the most accurate cannon-based air defense system worldwide. And we've been quite successful after its market introduction. It seems to become the benchmark and the weapon system of choice in a very booming market segment. But I will come also in a second back on the subject. If you can please move on. So again, that's our satellite communication business. It's called EM Solutions with 30 to 35% EBITDA and a growth rate year over year between 50% and more. So that's very promising. Also here we have the highest accuracy in terms of tracking of the satellites, and by that we have the highest bandwidth in transmission, and can offer on top of that a multi-band communication capability which is broader than anybody else, as we can simultaneously communicate in XKU and Ka band, which nobody else can do. So this is a very superb product, and as many other companies are running after that and even want to buy EM Solutions, we are quite confident that we are well placed in the market. We just need to execute our export strategy. And to give you some more flavor here, also EM Solutions was up to our acquisition founder German, so they had no interest in export. Since we've taken over the company, they reached out to the European market, and we got contracts from, for example, the Dutch Navy, the Danish Navy, the Norwegian Navy, the Portuguese Navy, and pretty soon also from the Japanese and other navies. So it is an extremely profitable and good product line. So that's EM Solutions. Let's move on, please. And then we are active in space. That is our origin. I mean, when the company was founded in the 1970s, it was benefiting from a US program, which was called during the 1980s SDI under the Ronald Reagan administration. It was all about shooting intercontinental missiles by lasers from space. So we have been part of this program and we've benefited from that. And once the program was put at the end of the Cold War to the graveyard, we have inverted this technology and we were using since that lasers from ground to engage against object in space. So we are tracking any debris in space with an accuracy down to 2 centimeters, which is unmatched in the market. Nobody can do that outside the US. So we are tracking those kind of objects. So we sell those services for satellite operators, give anti-collision warnings, and can also track any kind of military object in space. Any killer satellite can be followed by us, and we sell those kind of services, obviously also for military operators. So this is a business which is so far quite small, and we are undergoing a big transformation to convert this into something which we call space control, which is one of the most strategic opportunities for the company. I would like to come back on this particular subject at the end of my presentation. So if you can please move on. So those are our 2 sites in Australia where we operate those kind of systems, but those systems we are happy to export worldwide, and we've sold lots of those stations to more than 40 countries in the past. Please move on. So let's talk about the market in defense. The overall defense market, as you pretty much know, is extremely booming, thanks to the conflicts in Ukraine, but also in the Middle East. So we all expect a steady state growth over the next years to come. And even if, hypothetically, the Ukraine war would come to an end, there's at least a phase of 7 to 10 years to replenish all the emptied stocks in Western world, because all those kind of stocks were depleted in favor of Ukraine donation programs. And all the European and American customers will need to fill this up, and not only to the level as it has been prior to the Ukraine war, even more because of the new threat scenario in Europe. So this is giving us quite a promising outlook, and we are very confident that this market for the normal ground-to-ground weapon station applications will be extremely supportive over at least the next 7 to 10 years. On top of that, there's another trend, obviously, in the marketplace happening. So the armies around the world have started to introduce robotic vehicles in the battlefield, unmanned vehicles to replace manned vehicles. That's a trend with which we will benefit, for the simple reason that any robotic vehicle needs a remotely controlled weapon station. There is no way to have a soldier behind the machine gun and shooting. And secondly, our high accuracy and reliability plays into our favor, as thanks to our higher first hit probability, our systems can last longer on the battlefield. All the other systems come to an end when obviously their ammunition is completely depleted. Then they need to go back to depot. Our systems can stay longer there, which is a key advantage in the battlefield. So we believe that this mega trend towards UGVs or unmanned vehicle will be another trend on top of an anyhow booming market for us. So we are very optimistic in that respect. Please move on. And on top of that, the following has happened, and that's a very important point. You all might remember that after the Second World War, air defense was equal to cannon-based air defense. So you were shooting down aircraft and helicopters by cannons. Those kind of cannon-based air defense systems have been pushed aside by missile-based air defense in the 1980s. And the missiles were offering a longer range and a higher reliability and more flexibility. So missile-based air defense was the effector of choice. And then something happened which nobody has expected around the world. It became apparent in the Ukraine war. In the Ukraine war, it became apparent that the air warfare was not driven by fighter jets, not by helicopters, and not by highly sophisticated large drones. Instead, the airspace was contaminated and impacted by hundreds and thousands of small, semi-commercialized drones flying in big swarms. Drones which everybody of us can manufacture in our own garage at home for a price of $2,000 to $10,000. So the problem is now that on the one side, I mean, Ukraine is running out of missiles because nobody can afford spending so many missiles to shoot on this high quantity of drones. And you have to imagine that any missile comes in for a cost between $500,000 and $1.5 million to shoot down a drone of $2,000 is not really a commercial equation which works for a long period of time. So it simply became too unaffordable for the Western world and for Ukraine. That's one reason why the Ukrainian armed forces are asking now for cannon-based air defense, because they found out cannon-based air defense systems like our Slinger system are perfectly fine to shoot down those drones, which are flying at low altitude and at quite low speed. The second effect was that in the beginning of the Ukraine war, air defense was also using jamming systems, so to interrupt the connection between the operator and the drones. The Russians have learned the lessons, so they have replaced those kind of drones operated by remotely controlled operators by pre-programmed drones, and they were hardening the drones by shielding the electronics to make them non-susceptible against electromagnetic jamming. You can see this in this chart below, which is not our chart. It's the ones published by the Ukrainian armed forces. You can see the number of drones which could not be shot down was increasing simply because of those two effects. The resistance against jamming, and Ukraine cannot get enough missiles to shoot the drones down anymore. And now the following trend started. All the Western nations started to donate cannon-based air defense systems to Ukraine. So we got contracts from the US Army, from the German Bundeswehr, from the Dutch government, from the French government, hopefully pretty soon. So all those governments have started now not only to consider this kind of systems as a donating product to protect the assets in Ukraine, but also to reintroduce those systems for their own self-protection in Western Europe. To give you one example, the German government has donated to the Ukraine government IRIS-T missile-based air defense systems from our partner company Diehl. Those systems are highly effective, but the Germans have lost 2 radar stations, the value of more than 200 million euro, by the impact of 2 drones, each of them $2,000 in value. So obviously, the German government decided that they need to install self-defense systems, and they have then evaluated our offer, Slinger system against the Rheinmetall Oerlikon Skyguard system. And the government decided to buy ours, not the homemade Rheinmetall one, simply for the reason that our system comes in for less than 10% of the price of the Rheinmetall system. So we have a significant advantage in those kind of domains, and thanks to our superb accuracy, we seem to become the effector of choice also for other nations like France, UK, and even the US. Just to give you another example, the Americans have donated 50 M1 Abrams main battle tanks to the Ukrainian. They have lost at least 14 of them because of drone attack. So the Americans have instructed the Ukrainians to withdraw from the battlefield all the Abrams tanks. They've asked us now to give them more or less overnight 2 of our Slinger systems for testing in the US. And they told us if those tests are successful, they will equip all those tanks with our system. That's for us also a big honor, because the Americans could also go for another system. So those are just 2 examples to underline our high accuracy and our reputation in the market. And this anti-drone market now comes on top of an anyhow very bullishing ground-to-ground classical application market. So we are very confident that those 2 effects will create a kind of sustainable growth for our remote weapon station business line. Please move on. So this is our system Slinger, which I was just mentioning, with an integrated radar system. To give you an indication of the price, an R400 typically sells inclusive the weapon for around about $500,000 to $700,000. The Slinger between $700,000 to $900,000, an R150 for $250,000, $300,000, and an R800 between $1 million and $1.5 million, depending on the configuration, to give you an indication on where we are. And the net profitability figures I already have given you before. Please move on. So you can see that we ticked all the boxes. I mean, the markets are extremely promising. I think they have never been better than now. We have launched to the market lots of new products, and we are already developing the next generation weapon station, including latest state-of-the-art artificial intelligence capabilities. So also that box we can tick. There's nobody with this kind of large product portfolio on the marketplace. We've increased our sales capability, and one word in terms of production. So we can produce within our Australian operation in 1 shift operation about 360 systems a year. In 2 shift operation, obviously we can double the figure, and we have in Huntsville, Alabama, a second production facility with the similar production capacity. So we can easily adapt to increasing market sizes. There's almost no CapEx required because that's not a robotic integration. We do this more as by manual integration by engineers of highly sophisticated products and components. So doubling capacity is coming almost free of CapEx, which is really a good sign. So all of that is very promising, and now we are working on the order book. We realized last year great orders, in particular from within Europe, where we have not been in existence before. And we expect for the second half of this year also significant orders coming in order to have a 2024 calendar year result, which hopefully will be the 2023 result. Please move on. So those indicate some recent business wins. I do not want to go too much into details. Obviously, the success in Germany, even if it was only a very small contract in the beginning, because the German government wanted to test the system, it is for us very symbolic and a very strategic nature, as we were defeating the two major local companies, Grossmacher, Wegmann, and Rheinmetall. By the way, we have a kind of similar success in Israel, where the Israeli government was buying systems from us, despite the fact that they have two local key competitors, Elbit and Raphael. They were buying from us. So we seem to be on the right track. So please move on. So the market update, again, I don't want to go into the details here. It is very promising. I mean, we are close to sign a significant contract in Australia for the Land 400 Phase 3 programs with more than 129 units. The Middle East is extremely demanding. We are delivering almost to any country there. We have an operation in Abu Dhabi. We have just created and set up a second company in the UAE, a joint venture with a local player. And we will produce locally our R150 product line there. In Europe, as I was mentioning before, we are going in this kind of teaming structure with local players into the key markets. And obviously, the demand there is almost unlimited. So we seem to be coming at the right point to the right spot. And same applies also, obviously, for the EM Solutions, satellite communication terminal market. So if you can please move on. Clive, maybe you can give us some further details on our financial performance.
Sure. Thank you, Andreas. So I will briefly skip through the financials, and please drop questions into the box and we'll cover them shortly in Q&A. The results for 23 are shown, as I said earlier, revenue higher than ever at 219 million. Gross margin grew from 34% to 44%, partly as a result of the discipline we put into the sales function under new leadership during the 2023 year. We earn a base gross margin on large multi-year projects of maybe 40 to 45%. But what we do is we price properly when we can. So on some contracts, we can earn a 50% margin or a 60% or sometimes even a 70% gross margin on materials. And some of the recent sales of counter-drone products secured very high margins on that basis. You can see return to EBITDA during the year. The high finance cost of 35 million is attributable to the significant debt that was taken on during distress, and I'll come back to that in a minute. But the finance costs are falling year by year as we repay the debt. Results split first half, second half, shown at the bottom of the page. Typically a stronger result in the second half than the first half. For calendar 2024, our revenue in Q1 was 77 million Australian dollars, which is more, you can see, than the 74 million we did in the first half of calendar 2023. So significant year-on-year revenue growth in Q1. And we have guided in the market people towards the analyst consensus for calendar 2024 revenue, which is 240 million Australian dollars. We do aim to manage market expectations carefully, and that means making sure we can deliver on our promises. So we will keep the market informed, and if there's any change to that guidance, we'll announce it later in the year. Just going to the next page, which highlights the order book and the split of business by geography. Firstly, on geography, as you can see in the chart on the bottom right, most of our business in 2021 and 2022 was in Australia and a single customer in the Middle East. But in 2023, we succeeded in growing the European part of our revenue base to more than 30%. In future, we expect to continue improving the geographic diversification, in particular by growing our business in the United States, where we have appointed a new management team. That's a significant market for this company. It's one that we have a good opportunity to win in, particularly with our local production facilities, and we look forward to growing that in particular. Order book backlog is shown at the top right. As you can see, we successfully grew the order book from the level in 21 and 22 to $440 million in December 2023. Typically, we expect with a strong market and the products that we've got, we would like to grow the order book further, and that's what our work this year is intended to do. The next slide shows the cash flow position for the business that I mentioned earlier. So I will not go through this in too much detail. I note that the strong operating cash flows allowed us to invest $35 million in the business in 2023. Of that 35, only $3 million was real capex. 32 million was cash security deposits for bank guarantees to grow the business. Because our business has been in distress, some of our bank guarantees have a very high level of cash deposit collateralization. However, we are seeing some improvement in this as we repay debt. So at the end of 2023, our cash at bank was $71 million. But in addition to that, we had $67 million, an additional 67, that was restricted cash security deposits in support of bank guarantees. Now, as we reduce debt in the company, which we did in 23 and more recently in 2024, we expect to be able to secure lower collateralization levels on these bank guarantees and free up some of that restricted cash that I just mentioned. So just turning to the debt position, which is on the next page, as Andreas said, in 2022, the company borrowed $70 million worth of principal in the left-hand column from a long-standing equity investor, WHSP, which is an investment house in Australia. That $70 million, as you can see, the principal attracts very, very high interest rates of 19 and 26% because it was taken out at a period of acute distress. However, we have been running this business with discipline and a focus on cash flow during 2023. And as a result, you can see we repaid the first installment in September 23 on schedule, and we repaid the second installment in April 2024 on schedule. The debt has a 100% make whole clause, which means that if we repay early, all of the interest to maturity gets paid. So there's no advantage, and it's not in shareholders' interest to repay that debt early and incur these high rates of interest earlier than we need to. As a result, our strategy on this debt is to continue to manage the business for cash flow with discipline and ensure that we're in a position to repay that debt in October 2025, when that final payment of $52 million is due. Relationship with the lender is very positive. WHSP are our lender. They're also our largest equity holder, and they hold 10% of the company. And they have recently invested in the company some more by buying additional shares. So the relationship is very positive. With that in mind, I'm going to hand back to Andreas, who's going to cover a couple of things before we get into Q&A. Thank you, Andreas.
Thanks, Clive. I would suggest we skip this page because I covered most of the points already in my previous times. So, ladies and gentlemen, what we have been discussing so far are our two cash cows, the remote web station business and our satellite communication terminal business. We didn't touch upon our two very strategic business opportunities. One is called the high energy laser weapon business. So the company has invested in the past lots of its own money to develop our own high energy laser weapon technology. And we have developed a system which can be scaled between 36 and meanwhile up to 100 kilowatt. With this kind of technology, we are outside the US almost alone on the marketplace. There is outside the US only one company from Israel called Rafael, having a similar type of technology and a similar type of product at the marketplace. But other than Rafael and us and a Chinese supplier, which obviously has its problem to get his system sold in Western world, other than us, there is almost nobody today. The French are still working on a technology within the 2 to 5 kilowatt range. The British between 20 and 50 is still trying to get something working and focusing on the naval application, whereas we are focusing on the anti-drone terrestrial application. The Germans with my previous company, Rheinmetall, are still in the range of 10 to 20 kilowatt, and that's it. There's nobody else. So what does it mean? So we believe that we can turn this business into a very profitable growth business for EOS. So we are very confident to be able to sign over the next few months, 1 or if you're lucky, 2 contracts in the range of 50 to 100 kilowatt. Nobody so far has sold any laser weapon system in this power range on the world market. That means any acquisition of those 1 or 2 contracts, each of them is a cornerstone, not only for EOS, it's also a game changer for the entire laser weapon industry worldwide. So we expect from the first acquisition a big push in the market, and knock-on effect that even more clients will come and ask for a similar type of systems. So this is the turning point for us, because so far we have subsidized this kind of business in the past. With the first contract to come, this will turn into a cash machine, into a cash positive business, which makes us very confident. To give you just an indication, one system is in the range of 50 to 100 kilowatt, sells between 40 to 50 million US dollar. So it's quite expensive good. It is very rare on the market. And again, from a competitive standpoint, there are only 2 players competing, Rafael and us. So it's very promising. And on the lower bottom side, you can see something which we call space control or space warfare. This is our conversion of our space observation, space awareness, space intelligence business. So what do we do? As the growth perspective, selling debris, space debris data is very limited. We've decided to convert this business and to transform it into a military, into a defense type of business by offering the following 3 services to the market. First, to offer systems which can temporarily dazzle or blind the satellite sensors. That means we can give our clients the possibility to avoid their enemies to take any picture, any intelligence from their grounds and territory during the time when they fly over the territory. Second, by increasing the power of our laser system, which we have embedded in those kind of ground-based space engagement systems. So with a higher laser power, we can not only temporarily dazzle those sensors, but we can destroy those sensors on a permanent basis. And if you increase the firepower more, the laser power more, you can even disable the entire satellite. Any satellite in any orbit, whether it's low Earth orbit or even geostationary orbit, we can then knock out any satellite. This is a capability which nobody outside the US has. You need to have the following key technologies under control. One is the laser technology. And again, in our power range, there's only Rafael from Israel outside the US. Second, you need to master the telescope build technology. And we have sold for the last 40 years lots of those big telescopes. And third, and this is the most demanding key enabling technology, it's the technology around atmospheric correction, adaptive optics. So the atmosphere obviously is fluctuating, flickering, and causing the laser beam into distortion and bending. So it requires a very sophisticated software and technology in order to avoid the laser beam not to hit the target in space. We have this kind of key technology developed over the last 40 years, and we can prove that we can hit the target in space. How can we prove that? We have our own test satellite in space. It's a kind of multi-mirror satellite, and we can shoot up a laser beam. It's reflected on the satellite, on the mirror, and it's coming back, and we can measure the intensity, the power level once it's back to mirrored to Earth. So that's a proof that we are on the satellites, and obviously we can demonstrate the effect on satellites. This is a new marketplace where obviously everybody was quite afraid of talking about, and that has changed when 2022 the US government has formally announced to put in place this kind of system. So they were very clear in the statement saying that we want to have the capability to shoot any satellite from ground by laser weapons. That was the starting point of a multi-billion-dollar US program. And as we were cooperating with Americans in the 1970s, we have the kind of similar set point technology-wise, and we've decided to do this by our own with third-party funding. So we're still seeking for investors, for industrial partners in order to fund the development cost, as we don't want to use our own shareholder money for those kind of development activities. So this is something which is creating a market segment in which we are the only mover, the only player outside the US. And the US government will not allow the US companies to export it because of the sensitivity. So that is an aspect which also protects us in the laser weapon market from US competition. US laser weapon producers don't get an export license for systems above the 30 kilowatt threshold level today. So obviously our strategy to offer the high energy laser weapon and the space control systems into the non-US world market is some unique feature, again, where the competitive landscape is very clear and where we expect a significant growth over the next few years. Again, the first one to click in will be the laser business, and then from 2027 onwards, the space control opportunity. Important is the message on this slide, even if directed energy laser weapon business and even if the space control business is not coming, even then we have a steady growth for at least 7 to 10 years ahead of us with the SATCOM and with a remote weapon station business. Very stable, very interesting growth. But if only one of the other pillars comes into play, and again, we are optimistic to sign over the next few months the first significant laser contract, that's a game changer for the company and will boost us into the next level. So that's the story of growth for EOS. And with that one, I would like to summarize. So EOS has done successfully the first phase of its restructuring program. We have renovated our product portfolio. It's the most interesting, the broadest one on the marketplace. The markets are extremely supportive for the next 7 to 10 years. We have the cost under control. We've restructured all of our old contracts in a way that they're all cash positive, all over the product and the project lifetime. And we are very optimistic, not only for the short term, but also for the mid and long term perspective for the company. With that one, I would like to close and would like to give back to Judith in order to lead us through the questions. I think we received quite a lot of questions in the meantime.
Yes, thank you very much, Andreas and Clive, for the presentation. And thank you for sharing, David from ER.